So, panel number 2, open banking and open finance. Apparently, we've been shortchanged time, but we'll try to cover as much ground as possible. So we'll get right to it. I am very, very grateful to have such an esteemed group of panelists. I'm going to start with Christiana at the end. Could you just introduce yourself very quickly and your role, and we'll just go down the line.
Thank you. My name is Christiana Vovidou. I work for the European Commission. I work for the Digital Finance Unit in FISMA. I am a lawyer, but I previously worked as financial services attaché for my member state, and before that I used to work for the Securities and Exchange Commission of my member state. So I have been a regulator for a long time before joining the Commission.
Thank you.
Good afternoon, everyone. My name is Pina Roskan. I'm a professor of entrepreneurship and innovation at Oxford University, and I'm also the founder and director of the research center Oxford Future of Finance and Technology Initiative, where we do research on technology issues that affect the financial sector and beyond, such as CBDCs, AI and data issues in finance, and overall open banking and open finance. Thank you.
Nelixa.
Good afternoon, everybody. I'm Nelixa Davloukia. I'm a former regulator with the Financial Conduct Authority and the European Banking Authority. I worked with both organisations on the Payment Services Directive that is now subject to negotiation in the EU process. I was head of regulatory at the Open Banking Implementation Entity, and I'm here today representing the Open Finance Association, an industry body representing fintechs on the demand side of open banking and open finance.
Fantastic. And really, you don't need to introduce yourself, but why don't you, for completeness, in case anyone online has just joined us?
Yes, indeed. Thank you, Sandra. Very, very briefly, Ondrej Kovařík, member of the European Parliament and Parliament rapporteur on the PSD 3 proposal.
Excellent. And my name is Sandra Rowe, and I'm the CEO of the Global Blockchain Business Council. And I want to thank again Ondrej and his entire team for their collaboration in bringing this together. So let's start with open banking. And I think we need to do some level setting for those who may not be deep in the weeds. Ondrej, in your opening remarks, you mentioned, obviously, that this is a very timely discussion because first readings are happening now. And Christiana, if I may start with you, could you just give us a sense of, from a European Commission, DG FISMA standpoint, where do we stand? What's the overview on open banking, and particularly in relation to PSR and PSD3?
Open banking. When we talk about open banking in the EU, we generally mean the access right to payment account data held by credit institutions, and this framework is included in the Payment Service Directive currently, that has been around for a number of years now, and it's currently being reviewed and replaced basically by a directive and a regulation, the PSR and the PSD 3. So the experience with open banking has been generally positive. It has contributed to a great extent to the development and creation of data sharing markets, at least for payment account data. But this success has not been 100%. It has been mitigated by the existence of some barriers that come out of the existing framework of PSD. So the PSR and the PSD 3 are trying to mitigate some of these barriers and improve the experience. At the same time, they are not a revolution. They are an evolution, as we usually say. So it doesn't go that far, but tries to improve some of the features of open banking that are already in the PSD2, but that does not remove or change dramatically what the provisions already are in this directive. The proposals have been out since June last year. They are currently being discussed by the co-legislators. The Parliament has been faster in finalizing their report. It's just been out. Article 43 PSR is of particular interest to open banking. It provides for the dashboards, and as we have seen, the Parliament proposes some technical amendments and additions, which we will be happy to work on. The Council also started examining the proposals last summer. They didn't start by examining open banking. They started by tackling other issues like fraud and other payment issues, because the framework does not only include the sharing of data, it's about payment services, actually. The Belgian presidency now has put the open banking provisions into their agenda, and actually we expect that in the next Council Working Party meeting, which is scheduled for the beginning of March, open banking provisions will be on the agenda as well. The Belgian presidency has prepared also a paper with their views and the proposed way forward. So we are very positive that the conversation on open banking will kick off shortly in the Council as well, and we'll see where that goes.
Thanks very much for that. And I'd be remiss, Ondrej, if I didn't ask you for your view, coming from your perspective, and the long journey you have been on. What are your thoughts on where we are right now?
Yeah, thank you very much. I think to follow up what the Commission has just said, just to exchange the compliments, that indeed we were very fast, but we have to say that we were working on a very good proposal from the European Commission. And I'm not saying this just to please the Commission, but I think it's the general assessment that the work that the Commission has done in preparation in terms of consultative process and the preparation of the regulation, and both the regulation and the directive was very good, and I think it actually has taken into account many considerations coming from the stakeholders, so that I think our work as co-legislators is much easier. Just to also clarify, we were faster because we are just closing our mandate, and we need to finalize our first reading. Maybe a very short procedural thing, because this is something not very well understood. What we can do as parliamentarians before the end of the mandate, we can close so-called first reading here, which means that we want to get through the vote in a committee, which happened last week. So we have the committee agreed on both the proposal and the parliamentary position on the regulation and the directive, and we want to make sure that in the period of several weeks, ideally before mid-April, we will get also the plenary to vote on the file, so that position of the Parliament is concluded. And once new Parliament is composed and starts to work, and the Council is obviously ready, that we can engage in the final stage of negotiation. I think this is just important to clarify, because it gives us idea where exactly we are in the process, even though the Parliament would be actually voted in for the next mandate. So we managed to do that. On the open banking, as I said, I think there has been already a good basis in terms of practice, but we'll definitely hear from the industry your views. So there was not actually a huge political debate about the open banking provisions in the Parliament, and I think this is also that the fact that the Commission took this gradual approach, so basically fine-tuning what is in there. We basically did the same thing on the Parliament side, but it's true that I'm not really sure that we addressed some of the main concerns that stakeholders are voicing when it comes to practical application of the open banking provisions, be it the quality of APIs, quality of data, access to data, very diverse sort of appetite of the stakeholders to share some of the data they have. So I think these are still issues that will be pending even under the new regulatory framework, and I think we should maybe look at them in terms of practical application of the provisions that we will agree on, rather than by changing the regulatory provisions. But this is just to say that I think we are aware that even though that I think the open banking in general provided us with some new products, some new business model, some new opportunities, there are definitely still some concerns that should be addressed in the future.
Thanks very much for that. And we will now be turning over to Nelixa. You are a former regulator, but today you're going to represent industry. And what is some of the issues that you've seen come from industry feedback?
Thank you, Sandra. And before I answer your question, thank you, Ondrej, for hosting us today. And thank you for the GBBC for this invitation to actually come and share some thoughts on behalf of the Open Finance Association. And also, thank you for progressing to the vote. I think it was, if I remember correctly, it was a Valentine's Day gift.
Indeed, yeah.
That you gave to industry.
Because we love payment services. Right?
Absolutely.
How sweet.
So our thoughts on the payment services regulation in particular, because that's the bit that deals with open banking. We were actually very pleased with the way that the Commission had framed the regulation. We think that it is an exceptional starting point. But as we move forward, I think we need to look at what exactly do we want to build in this open banking ecosystem. And I would say that there are three key pillars there. One is high security, two is trust, and three is great customer experiences. And if you look at it through those lenses, then for us, one of the biggest challenges in the current proposal is the ongoing focus on having this contingency or fallback. From our perspective, if we want to be forward-looking with this regulation, then we need to focus on API access. We need to move away from the security risks, the lack of privacy that comes with the other types of access that exist, screen scraping, reverse engineering. And we also need to give consideration to the fact that having this alternate, we can understand the drivers, is not a whole-of-market solution. You can't actually flick a switch and move from API access to something else via the customer interface. And also from the perspective of the supply side of the market, primarily the banks, from our perspective, it detracts focus from building well-functioning APIs. And the one thing that we as an industry want across the board is well-functioning APIs. And then that obviously moves us into customer experience. For people to use open banking, it has to work well. It has to be harmonised, it has to be consistent. And I always use this sort of comparison with card payments. Wherever you go in the world and you pay with card, you do it the same way, whether I'm doing it in the UK or Europe or America. And that's what we need to think about when we think about open banking journeys and customer experience. And at the same time, part of that customer experience, and all my points around security, trust, customer experience, they're linked, is harmonisation. We need standards that are implemented in the same way. Although we have, one or two standards that are predominant within the EU, they can be implemented by individual banks differently. And if you look at how payments work today, they're not done differently. An instant payment will be an instant payment, however it's done. In other jurisdictions in the UK, a faster payment is a faster payment. Bank A doesn't do it differently to Bank B. And that's going to provide better services, better consistency, and build trust within the ecosystem. And I think if we focus on all those things and we craft a legislative basis that considers those, then I believe that, open banking with the fact that it can build on instant payments, which is obviously we welcome as well as it's foundational for open banking payments, is actually the key to a pan-European payment solution within the UK. You can, within the EU, you can pay easily across borders if it's harmonised, if it's consistent and it has trust and it provides that security that we expect in our financial services ecosystem.
Any views on that? Otherwise, I want to bring in the UK perspective. Pinar, you're based in the UK, and at one point, if some recall, the UK was part of this wonderful world, and now it is no longer. So can you talk a bit about how you see open banking in the UK now versus before?
Thank you so much. So open banking in the UK has been a long journey, perhaps longer than in the EU, and we've been following it for several years. At Oxford, we've just published a paper which is available to view, where we compared some of the intended versus unintended consequences of decisions that we're taking around open banking and then later on open finance. And you just heard an analogy from Cambridge, so let's hear one from Oxford for completeness sake. I can think of open banking and open finance, of course, as a way to innovate, but in order to innovate in a digital world, let's say that those fintechs, those third parties that want to give customers better, more interesting, more tailored services in finance, they need electricity. And if you think about needing electricity, that electricity is consumers' data, right? Every time a consumer gives consent to a third party for using open banking, that third party gets a plug that fits that consumer's socket exactly. But just like, coming over here on the Eurostar, I had to remember to bring different plugs for my computers. If you have different kinds of plugs, different kinds of sockets, you suffer. And so I think that's why it's extremely important to think about standardization of APIs, as Nelixa mentioned. If we don't have standard APIs, which is one of the things that I think the UK, making a decision as one entity did well, the standardization of APIs actually is a very important step. But there was also something that was not expected, which is something that we discovered over time through interviews. As banks started to respond to open banking regulation, the first response, as we all saw, was one of hesitation and dragging feet, because they perceived themselves to be on the losing end of the deal. And what that meant in a world where APIs needed to be published was that the APIs, even though they were supposed to be standard, they were not exactly standard. And when you have APIs that are not standard, then either the fintechs suffer because when something goes wrong, the consumer perceives it to be the fault of the fintech, or somebody comes and fixes the situation. And so we observed a new industry role in the UK emerging, which is a technology firm called an API aggregator that stands in between the bank APIs, which at the beginning were absolutely not functioning well, and the fintechs in order to make that connection seamless. But as that role emerged and they moved from making sure that connectivity worked to what can we do now that that plug and the sockets match and that electricity is flowing, was that they started to invite third parties from other industries, airlines and supermarkets and all sorts of other retailers into the financial industry in order to take benefit from open banking. So that was one of the interesting unintended consequences that we saw. And also thinking about why open banking is not picked up at the level that we would like it to be, I think that's not an unintended or, let's say, unexpected consequence. The education element is very important. In a situation where banks perceive themselves to be on the losing end for a long while, and fintechs not having the resources to educate the customer, it falls on the shoulders of institutions, including universities, of course, but also governments and regulators, to make sure that the consumer understands what they're getting into, and that this world is actually securer than the world before, in which, in the previous world, they were using screen scraping. So those are some of the things that we observed at Oxford through our research, and that's available through our website. Thank you.
Great. And for the benefit of the online audience and the group, we will distribute any links that are mentioned in our panel. So don't worry if you are too lazy to go to the website. We will do it for you. No problem. Open banking seems fairly straightforward, and I think the harmonization point and standards work is critical. We're going to move on to open finance, which I think is where some of the fireworks may start now. I was promised that we would have a bit of a debate because I think it's actually quite important. For one, level setting, understanding what open finance implications are and what it actually means, but then further to that, what are the next steps in adopting open finance regulations. So, Christiana, back over to you. You are our level setter. Can you give us an overview of where we sit now on open finance and what is the difference?
Okay, so a lot of the comments we received on when we were developing the open finance framework, which when we talk about the open finance framework, we basically mean the FIDA proposal. It was, I think, most people were, I don't want to use the word shocked, but, surprised that we broadened the scope of the data sets to practically everything apart from payment account data, and a couple of data sets that were deemed to be too controversial and would lead to financial exclusion to include. But everybody was saying, whoa, you should do a staggered approach, more step-by-step approach, all that arguments, we heard them. But the reality is that the Commission has already done a step-by-step approach, the first step being open banking. The first step was open banking, the payment account data. And now we go the second step, which is broadening up the scope to include more data sets, like more types of banking data, investment data, insurance data. And we also want to include more eligible entities into this equation. It's not only about fintechs and credit institutions, it should be about all financial institutions and fintechs. Open banking provisions, the FIDA proposal is not copying open banking for many reasons. One of them being that we try to mitigate some of the problems, some of the lessons learned from open banking, we try to build on them and provide solutions. That's why in FIDA we promote further standardization. We try to give incentives for the creation of standardized and efficient APIs for the sharing of information. Bilateral agreements between parties are not prohibited, but we try to move the industry towards the creation of data sharing schemes. I like the analogy of Pinar of data being the electricity for innovation. I hope we are not giving an electric shock here. But so anyway, the proposal has been out since last July. They came out together with the PSD2 review. Right. So the Parliament is again faster and working towards finalizing the report, we hope. Mm-hmm. And would be extremely happy for the EP to finalize their report before their Parliament recess. The Council has started discussing it as well. The Belgian presidency picked up where the Spanish presidency left off. The Council needs to complete the first reading of the proposal because we haven't gone through the proposal yet in the Council. We hope this will be done in the next Council Working Party meeting, which is also scheduled for the beginning of March. The Belgian presidency told us that they are aiming for a general approach, which is very good news. So we hope they can deliver. We are there to help them. For us, it will be very fortunate if both the co-legislator positions are ready before the summer elections, so we can begin trilogues as soon as possible. So, Ondrej, over to you. This roadmap of where things could go, are we on track from a European Parliament perspective? What are your views?
We're definitely on track, but you wanted some debate, right? So
yes, I'd like some debate here.
No, I think if what has been said about the open banking and the payment services framework, I think it's is not exactly the same from my point of view on financial data access. And I think I know that it's this sort of extension, but I don't fully agree with the fact that the first step was open banking and then the open finance. For me, it's like starting like open banking elementary school, and then we just go for PhD, directly.
Wow.
I think that is actually a leap, in there, and I really think that to make this step, we should actually maybe take some more time and see what is also needed in terms of our delivery to the market. When we discuss the open banking, and I fully agree, the standardization, for instance, is an issue, and I think the open finance is actually working fine in addressing some of the concerns that the open banking concept actually produces in practice. But it sort of combines both. It's like maybe just to wake you up a bit. Let's have this poll, right? So for the open banking and the standardization, I see there are two schools, right? One school is saying, let's make industry organize itself for the standards, and we will have something. And the other school would say, no, the industry will never organize itself. Let's get standards, done by the authority. So, I mean, what's the balance here in the room? So, who would be for the industry organized or industry driven standardization in open banking? Okay, and the public authorities giving standards? Okay.
Some are clearly abstaining.
Some.
We got some diplomats in the room that
and
clearly.
So then, indeed. But thanks for that. I think it gives clear guidance. Maybe also helping to support my cause here. But I think in open finance, what we see, there's also an emphasis put on the market-driven initiatives by the industry to organize themselves and create schemes. But in my view, in a very little amount of time, and with this second step, that would be the Commission intervening and organizing the schemes for the market. And I'm not sure this is the best way forward. So we are a bit advanced in the Parliament, so we tabled amendments. I think if they are not publicly available, they will be publicly available any minute. And you would see that, for instance, I'm proposing an approach that is a sort of a combined approach. So I don't believe in these two stages. So first industry, and if that fails, the Commission or any public authority should intervene. I think the industry should take a lead in any case. I believe the industry need to have a lot of time, because there are different sectors within the same industry. From the stakeholders, I know that let's say the pension funds would be already very well organized. The insurers would actually need a lot of time to organize themselves and invest in the infrastructure. So there's no same starting point. But I think what we can do is actually to help with the intervention of public authorities since the very beginning, to help to create a sort of a cooperation framework where these schemes can be established. So not, you start first, if you fail, we intervene, but actually create a sort of a cooperative culture. And I think this is also the way, in my view, main bulk of any digital regulatory framework should be done, because it actually requires a very good cooperation between the public authorities and the industry, not only in creation completely new frameworks like FIDA, but also in its application, in its supervision, in its actually the practical day-to-day functioning. And I think this, in my view, could be one of the options. I don't know if I have enough political support for that, but it's definitely one of the amendments that we tabled to the proposal, to make sure that there is actually a better culture in the policy making in this file. And I think, just one final point, because it was mentioned by the Commission. I mentioned for the payment services, we are actually trying to achieve the plenary vote in order to make sure that the position of the Parliament is agreed and would not change with the new Parliament. It will not be the case with FIDA. We are not that well advanced. So if we get to a vote, it will be only the vote on a committee level, which is already a good start, but it can be also then changed or revoked by the next parliament if they wish so. So there is, I think, still some time actually to consider what other improvements or possible changes can be done to the proposal as such.
Thank you. And I'm going to go to Pinar first. Based on what you've heard, would you agree or disagree with the alignment here?
Thank you. So I'm glad that you made the analogy from going from primary school to PhDs. In fact, I have students getting gray hair, getting PhDs in trying to understand what's happening in open banking and open finance. But so this issue of how much regulation is good, how much centrality is good is very interesting, because some of our studies show that it's a double-edged sword. On the one hand, if you have a very strong hand and you try to dictate everything, including the technology, then you don't allow the market to adapt, and then over time, as new technologies come in, it becomes stifled again. But at the same time, if you have too little central regulation, I'll give you an example from UK open banking, and I'm sure that Nelixa will relate to this. There was this period in which the strong customer authentication process was left to the industry. And banks said, you know, we can do this ourselves. You don't need to tell us how to do it. But the result of that was there were a typical customer, in order to give authentication, had to go through 15 screens. And that obviously is not just a result of banks not being able to do it, but also feeling that they're on the losing end, right? And so I think that if there's too little regulation, then the strategic incentives of the stakeholders, if they clash, which they clearly did, end up getting in the way. So overall, I think that in a data-driven industry like finance, in order for data to be used effectively by new players, and that's the whole purpose of open banking and open finance, right? To boost innovation and competition in the industry, in order for fintechs to be able to use data effectively, there needs to be a way that they can receive data through open banking and open finance. And in that transition between open banking and open finance, one of the interesting struggles that customers faced was a fintech, if they needed payment or current account information, they could go through APIs. That was fine. But for everything else, they couldn't. And so this staggered approach, while it had many advantages, it also had this unintended consequence where fintechs, in order to get access to different types of data, were forced to use different technologies. And that created confusion and actually lowered trust in the new entrants into the market. And so I think that it's absolutely the right thing to do in order to control and make sure that every stakeholder is on board. But at the same time, there are people who are on the losing end when you have a staggered approach.
Thank you for that. And Nelixa, please weigh in.
Absolutely. So open finance, absolutely right that it's API only focused, that I agree with what you just said, Ondrej, about how it should be structured. I think it's right from a regulatory versus industry perspective that there is a mandate for it to happen. There needs to be, I think, further consideration given to what is going to be that balance between harmonisation and fragmentation, because you have the current structure would allow a certain body to come together from, demand and supply side, but it doesn't need to be many within that industry. So you could end up with many schemes within a jurisdiction. You could end up then with many schemes across Europe. What is that? There is no whole of market solution here, which is going to be exceptionally challenging. I think, and I go back to the point I made originally, where do we want to end up? What do we want this ecosystem to look like for Europe? Because this legislation is going to be in place once it takes effect for a long time. We're not just going to revisit it, reopen it. And we know from open banking that it takes time to implement. So let's think now, where actually do we want to end up? And it might need to be incremental, but having it limited within the open finance ecosystem to data access only, in our view as an industry body, is exceptionally limiting. You look at what happened with Australia. They start with open banking, account information only. They know they need to have payments. Within an open finance ecosystem, we should be thinking about action initiation. You look at the number of products that will be available. As a customer, and we are all customers in this room, being able to look at what I want doesn't actually let me do very much. I need to go to other places then to actually action that information. And so we should be thinking now about, what more do we need within this ecosystem? And I don't necessarily mean from day one, but what should we provide for now so we lay that groundwork for that digital future? I think that we also need to think about prioritisation. So maybe it's a similar point to what you were making. We have open banking. It's a very easy step forward to move into the savings account, the mortgages, the things that banks predominantly provide today. And then you bring in some of the more complex financial services product, but building on the ecosystem and infrastructure that we have in place for open banking, not something new necessarily, not something different, but having it harmonised across the board. And again, when we look at what's been happening in the open banking ecosystem, we can, I'm sure, take lessons from the work that's been done at the EPC and SPA as well, and extrapolate that into open finance. But I think the key thing I'm saying is, let's think about where we want to end up and work backwards from there. And I think the one point that hasn't come out and I really wanted to make is that from a regulatory perspective, we really need to join the dots. We have open banking, we have open finance, we have AML, we have instant payments, we have all of the work that's going on around authorised push payment fraud. And we actually need to think about right now, what can open banking do for that ecosystem? Open banking payments, because of the fact that, particularly in the consumer-to-merchant ecosystem, mitigate authorised push payment fraud, and because you don't need to pre-populate the information of the merchant. So we've got all of these things, and as we move forward, we really need to join those dots to bring them together.
So this is going to be the conclusion part of what next. We like actionables on our side of the fence, so we're going to talk about what actually needs to happen to move things forward. So, Nelixa, continue that thought. Whose responsibility is it? Is it private sector? Does industry need to actually give and provide and lean in to support the regulators? Or is it actually the regulators that need to start joining these dots? Whose responsibility is it?
It's a joint responsibility.
Okay, public-private.
Absolutely. I mean, I went from industry to a regulator, I've gone back to industry, and the one thing I have seen actually over that period of time is the willingness of UK, EU, other regulators to actually engage more with industry, to actually take the lessons that industry bring to the table and think, how do we build this out together? I think, it is for the regulators, and it's challenging to have that balance of how much regulation and how much do you leave to the market, and that's never going to be an easy one. But, if you take fraud, it's incumbent on all of us in this room, all of us in this financial services industry, to move that forward.
So in our last few minutes, I'm going to have everyone just give their view on that. Next steps. Do you agree, Pinar? It's public-private collaboration and we need to step up?
I agree. I see your point, and I raise it. So I think that it's not just even financial regulators and industry working together. Industry boundaries are blurring, and we are at a point where regulators that are responsible for finance won't be able to join the dots. Even if they worked with industry players, they need to work with regulators from other industries. The simple reason is that as you expose data to competition, which is the absolute right thing to do to boost innovation, you end up bringing in players from other industries and industry boundaries blurring. And as new entrants are entering the industry, some of these entrants won't be entirely new. They will be coming from other industries. We also need to remember that there are already big corporations, we call them big tech, that are able to harvest data in a way that others cannot. Europe is at the forefront of curbing the powers of big tech, but we also have to admit that open banking and open finance does give them the same opportunity, just like it does give to fintechs, in order to get access to data and be a bigger part of the consumers' lives. So it's regulators from many industries joining in order to work on this in the future.
Okay, Pinar's just stepped up the ante there. Christiana, you gave us the level set. Now that you've heard all of concerns and obviously thoughtful suggestions for where we need to go next, what are your views? Is it important to get industry feedback and perhaps slow down the process?
Well, I think we all agree in the end that it should be market-driven. Our proposal is meant to be a market-driven solution. So I see agreement. Now, how much time you're going to give to the industry to do it? Of course, we can discuss and reach an agreement. I mean, if you give too much time, then usually nothing is done until the last minute. If you give too little time, there's not enough time. The Commission really wants to come in as a last resort, as a default option, in case the industry does not agree. It should be seen sort of like a carrot and stick approach. Okay. The carrot is, go ahead, agree on the schemes, agree on the API standards and all that. But, I mean, we're not going to wait for you indefinitely. The good news is that we have examples of schemes set up by the industry already. We have the SPA scheme set up for the payment account data for open banking, which is, it shows that the industry can reach an agreement when they want to. So we are hopeful that the Commission will not have to step in, and the schemes, or at least some schemes, will be developed in the end. So as a general comment, I would say, I mean, we don't see the FIDA as a controversial proposal. For us, it's an access right that may potentially lead to the development of better financial products and better financial services. I think the question for the co-legislator to answer now is really to whom do they want to give this right? And if they decide not to give this right for certain sets of data or to certain entities, what are these? Are there serious reasons for not doing so? Mm-hmm. Because to us, apart from the payment account data that is part of open banking, for us the guiding principle was that everything should be in unless there is very good reason not to be. So I will stop here. It's just that we hear the arguments of the data not being standardized, that there is not real demand for certain sets of data and all that. Yes, we hear that. But even when open banking was developed, we didn't know which way innovation was going to go. And in the end, we also were surprised where there were innovative solutions. So the same here. If we pre-decide where innovation will go by, for example, limiting the data sets or the eligible entities and so on, we may be missing the opportunity to provide something valuable to the market.
Okay. That's a very good point. Ondrej, I'm going to let you have the last word, and we'll close out.
Difficult role. No, but definitely agree with the fact that, well, at least that would be my plea for a joint culture, sort of, in not only in initiating and developing, but also in applying and then using the schemes. In terms of the FIDA framework, I think I agree with what has been said. We should, in my view, we should get it right, and it will stay with us, and it will actually shape the industry at some point. So I think we, if we need, we should take our time for the discussion. And also, I think what has been said on open banking is fully valid also for open finance in terms of the consumer empowerment and the financial literacy and understanding of all the opportunities that this framework will offer and deliver. So I think that on that point, it's clear. I think I fully agree that we should be able to give the access to the entire industry. I think it's about maybe changing the angle, whether we need to force all parts of industry to engage at the same time under the same regime. Is it one size fits all at the very beginning, or can we actually give an open opportunity for various parts of the industry to actually engage in their own speed? Because we know, at least the feedback that I have, is that the speed will be different for different areas, for different financial services providers, for the different products with different complexity of data. And I think this should be, in my view, better acknowledged and better taken into account in the framework once it's adopted, so that it actually opens for innovation. It gives this opportunity instead of forcing at any price parts of the industry to actually engage in it. And I'm pretty sure that most of the stakeholders will say that they will eventually try to get into sort of organized schemes, et cetera, because they know that they will benefit out of it. But I think it's actually to acknowledge the different starting points of the different parts of the financial sector. So I think there is a way to fine-tune and improve the proposal. Let's see where we get in the Parliament, but also in the Council. And I think this will definitely be one of the tasks for the next Parliament to deal with this regulation.
Well, thank you very much, everyone. And for those who obviously, it's actually pretty much everyone in this room, have a stake in what goes on in open finance and the discussions to be had, the industry has a small window, not a long window, to opine and support. So we should probably lean in before it gets done for us. Thank you.
Thank you.